Hello and welcome, dear traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is June 7 and we're starting from euro-dollar pair with Jakub Nowak as usual. With data on Germany's factory orders and a drop in the construction PMI index increased pressure on the euro, which led to a sell-off of the euro on Tuesday. Germany's manufacturing PMI index is expected to be downbeat as well. Only speeches of ECB policymaker Fabio Panetta and executive board of the Deutsche Bundesbank Joachim Wuermeling. If they make hawkish comments, it could help the euro rise higher in the morning. However, Jakub would recommend you to open long positions on the decline. For long positions, today we could buy euro when the quote reached 1.0697 and take profit at the target of 1.0725. I would recommend leaving the market at 1.0725 and then selling the euro in the opposite direction, bearing in mind a 30-35 pip downward move from the market entry point. The pair is likely to rise only amid positive economic reports. Before opening long positions, make sure that the MACD line is above zero or is starting to rise from it. It's also possible to buy euro after two consecutive price tests of 1.0676. At this moment, the MAC indicator line should be in the oversold area, as only by that will the market reverse to 1.0697 and 1.0725. You could sell euro today if the price drops below 1.0676. The target for sellers will be the 1.0652, where we recommend closing sell orders and immediately opening buy orders, expecting the move of 20-25 pips in the opposite direction from the level. The pressure on the euro will intensify in case of negative economic reports from Germany. Before selling, make sure that the MACD line is below zero or is starting to move down from it. It's also possible to sell the euro today in case of two consecutive price tests of 1.0697. The MACD indicator should be in the overbought area, as only by that will the market reverse to 1.0676 and 1.0652. The next stage of our review is the next major, GBP USD, presented by Sebastian Seliger. The GBP USD pair has bounced from the level of 1.2367 and has been consolidating in a narrow range seen just below the 50 and 100 MA. The momentum reversed sharply from the extremely overbought conditions on the H4 timeframe as well, and is currently testing the neutral level of 50 on RSI indicator. There is still a room for a momentum and price to move lower, so the short-term outlook remains bearish. The intraday technical support is seen at the price of 1.2367, and the intraday technical resistance is located at 1.2457. Gold, sweet gold. We've got a trading plan for this commodity asset presented by Dimitrios Tsapas. Gold is trading around 1964. below the 21 SMA, located at 1974. According to the daily chart, we can see that gold has found a strong support zone around 7-8 Muri level located at 1937. Gold is expected to continue rising in the next few days, and it could reach the psychological level of 2000 USD. We could even expect it to reach the plus 1.8 Muri level, located at 2062. In case gold tries to break the 21 SMA located at 1974 and fail, we could expect a technical correction, and the price could fall towards 1945, the area where gold left a gap on June 5 and the bottom of the symmetrical triangle pattern. In the chart, we can see the formation of a symmetrical triangle. In case the instrument breaks below this triangle and consolidates below 1937, we could expect it to reach the bottom of the downtrend channel around 1901. It could even reach the EMA 200 located at 1888. On the contrary, if the metal breaks the symmetrical triangle closes above the 21 SMA on the daily chart and additionally makes a sharp break of the downtrend channel, this price action could confirm a bullish acceleration and the price could reach the psychological level of 2000 USD. So we could even expect it to reach the plus 1.8 Muri, located at 2062. In the next few days, we expect gold to consolidate below 1977, because the market will be reverted to the monetary policy decision of the Federal Reserve. Disappointing news or a moderate announcement could favor gold, and it could rebound to the price levels of April 2023. The Eagle indicator has reached the oversold levels on the daily chart, thus generating a bullish signal for the next few days. But we should wait for the confirmation above 1980 to resume buy orders. What about the crude oil commodity asset? Arif Makmur describes. On the daily chart, the crude oil commodity asset appears to be still in the bearish bias, where this is indicated by the intersection of 54 EMA and the 200 EMA death cross. So that, in the next few days, CL has the potential to test below the level of 69.68. If this level is successfully broken down, and as long as there is no upward correction beyond the level of 75.03, then crude oil will head to the level of 67.04 as the main target, and the level of 63.69 as the next target. And finally, here's Laurie Bailey with AUD USD pair forecast. Yesterday, the Reserve Bank of Australia raised the benchmark interest rate from 3.85% to 4.1% against expectations of unchanged rates. This helped the Australian dollar reach the target level of 0.6670. and the Marlin oscillator and entering the area of the uptrend. However, the balance indicator line, red line on graphic, holds back the Aussie from the rising further, indicating that this is a corrective growth, say from the branch of decline since May 10. The current price represents a 61% correction from that movement. A reversal is possible, but so is a rise to the next level of 0.6730, which would be 76% correction from a branch of decline since May 10. However, we are more interested in the situation with the other central banks. Contrary to expectations, Hong Kong, New Zealand, and Australia raised rates in May-June. Today, Canada will announce its rate decision with the forecast unchanged at 4.5%. And the rate is raised, it provides almost complete certainty that the Federal Reserve will also raise rates at its upcoming meeting in June 14. Tomorrow, India will announce its decision. The current rate is 6.50% and the focus is unchanged. If Canada does not raise rates but India does, it will also be a sign of a rate hike in the US. Investors are aware of such signs, so a strengthening of the dollar may begin immediately. On the 4-hour chart, a price divergence with the Marlin oscillator has formed. The first reversal signal is present, so we're waiting for the further developments. The main scenario is bearish. Consolidation below level of 0.6670 opens the target of 0.6628. This level coincides with the MACD line on the daily chart, so its breakthrough can sharply intensify further decline. The strategic target is 0.6425. That's all for today. See you online soon. Good luck.